Okay, recording this video Tuesday, 28th of January 2014, 4:38 p.m. Chicago time. Market's shut and just rushing to get this video out. I think 5 p.m. is my cutoff time for emails, so hopefully I'll get this out in time. But how about that? You know, fantastic couple of days. Sell-off's been really sweet with the volumes and the ranges and the speed of this market. It's almost like back to the good old times. Over 2 million contracts traded the last few days. Today was only about 1.3. Yesterday was a reversal day. Today was a little bit of a continuation kind of up day. And it's interesting, in the after hours we've kind of gone to 1797, so we're just underneath the 1800 mark here. So interesting couple of days. Now everybody's going to say, oh well, thank God that's all over. You know, it's like been a really severe kind of decline over the last 2 or 3 days. It's gone a little bit further than the declines have gone, you know, kind of in the past. It's been faster, it's been larger volumes, all those kind of stuff, and people saying, whew, thank God, you know, now we can get on with the resumption of the uptrend. I don't think it's over. I think we're heading to weekly support, and I'll show you why I think that. So first couple of charts I'm going to show you, these kind of sequences where we're looking at the higher time frames, 3 charts at once with a factor of 3 difference between the 3 different charts. It's the same kind of setup, it's the same idea as I use in my day trading. You know, the day trading starts at the 500 tip bar chart for kind of the micro type stuff, then 15 and 4500 tip bar charts. Here, to get to a daily chart, you go down 3 different by a factor of 3 each time. There are 3 135-minute bars and a daily bar. There are 3 45-minute bars and a 135-minute bar. So here's the point. We're coming up to a cyclical support here on the daily chart, and you can see we've got crossover and better sine wave kind of lining up. And we'll probably put in that cyclical support on the daily chart with tomorrow's activity. In fact, on the continuous contract day and night, that's actually gone off. So we've got this kind of important kind of support level kind of down here in the high 60s. And everybody's thinking, you know, the market's going to bounce up from there, so ooh, jump on board. But look at this. We're in downtrends on the other 2 time frames. These guys have to work themselves out. They have to go pull back to end of trend before this thing's all over. The support on the 45-minute chart, last breakdown that we have, was up here at 1815s. So we've got to go pull back to end of trend. So this has got to wrap around and then come down, find a pullback level, and go pull back end of trend. On the 135-minute chart, exactly the same thing. You know, the support here is up in the 1800s, it's way up there. So this thing's got to come back, wrap around, put in cyclical resistance, go pull back to end of trend. We're going to bust through that daily support level by the time we put that in on the 135-minute chart. And this is why I say this is the weekly support level that is kind of more interesting to me than this daily one that we're just putting in. Again, the same setup, using a factor of 3 or near enough. You know, the daily to the weekly is 5, you know, 4 plus, you know, averaging out for kind of non-traded days and so on. What I'm looking for is this to wrap around on the weekly chart. You can see the little fast and the slow line on better sine wave starting to curl over and wrap around. In the next couple of weeks, that cyclical support is going to be put in. I think we're going to have weakness until we actually do that. This is a stronger move because the macro picture has changed. You know, we're in a new year. I keep on saying all of these things. And if you look to a cyclical support being married up with an end of trend signal, we're looking for an end of trend on the 135-minute chart at least to kind of match up with the cyclical support on weekly. So let's see. The emphasis is still going to be it's going to be running, you know, the overall tenor of the market is going to be weak. I think it's going to be running down. There's going to be people who are kind of stepping in right now thinking, oh, it's all over, you know, I need to jump in, blah blah blah, buy Apple because, you know, we had a whatever it was 8% sell off in Apple, you know, buy that. It's like, no, there's just weakness in the market until we see, you know, decent support kind of coming on the weekly charts. And you can see it in the other markets. I've been talking about this ad infinitum, it feels like to me, with the bond chart. So, you know, last year was all about a decline in bonds and a rally in equities. We reached overbought levels and we've been coming down on the oscillator between bonds and equities. We broke the zero line a couple of days ago. That was 1850 up here. That was really important. Bang. Now the indicator at the moment is kind of showing oversold at this level with kind of some red bars kind of coming in, and it's areas where we get kind of bounces. But I think the pattern's going to look a little bit more like this. You know, this is just too early. This isn't just a little kind of 2-day wonder and we're just going to bounce back. I think, you know, because we need to see strength in bonds, the money flowing out of equities and bonds, so on, this is going to run a little bit further. And the same thing with the yen. So I've been talking about this with the carry trade kind of coming off. Again, the story last year was the decline in the yen. It was pretty epic. and then the rally in equities, and now we're having a little bit of a rally in the yen, blah blah blah. You know, same old story, been saying again and again, talking about the carry trade starting to roll over. Now, interesting little pattern on the daily chart of the yen futures contracts. So let me just explain this. We see exactly the same thing on all the other charts, either kind of on a daily basis or an intraday basis. We've had this big kind of sell-off. You know, it's been massive. Okay, down here at the lows, we're putting in pullback to end of trend. I've been saying, looking for strength in the yen, because we had this blue professional bar. We had Rambo patterns getting wrong-footed down here at 95. Blue professional bar, come back into the zone, into that blue professional bar there. The blue professional bar picks it up again and again, and the strength of this move over the last few days just gave us an exhaustion pattern and pullback. That is short covering rally. So that is kind of an explosive, you know, reversal. People getting caught out of trailing stops, reversing their positions, you know, jumping on board because they think you know, the trend has changed. That explosive activity on the upside is showing short covering rally. So where does it go from there? I don't think the yen's going to roll over straight away, pull back to end of trend. I think it's going to mess around a little bit, put in a bearish divergence, and then go for a push back down. So I think we've still got a little bit of strength in yen at the moment, and that's again carry trade problems and so on. It's interesting on the don't want to show you dollar index, I want to show you Aussie dollar. So pullback to end of trend's gone off on Aussie dollar with an exhaustion pattern here. I told you that I was out of a short Aussie thing that I was doing, and kind of I think this is a good place to be starting to turn around. Canadian dollar still's a little bit weaker than the Aussie, but it's a good place to be, you know, getting out of a trade. I'm not talking about reversing, but taking profits on a short Aussie trade is a good point here. Not so much on the pound. I think the pound's going to break up. I know we've had pullback to end of trend and exhaustion patterns here. I think we're going to mess around. This is kind of clearly up here in these kind of new highs for the year. It's an area where you know, there'll be some profit taking or whatever. I still think it's going to continue up because on the weekly chart we haven't had blue professional bars kind of come in. Euro, you know, here was the catch. Down here we had a false breakout, blue professional bar step in, bang. We're just doing a little bit of a bull flag here, just waiting to continue up. So, you know, breaking back up above 37.5, anything like that, bang, this thing's going to continue to the upside. So it's just coming back into that professional zone. They were jumping on board it there. You know, it's not weakened, it's not got anywhere close to the lows of that blue professional bar. So this is kind of seemed to me to be heading up. And this is Canadian. It's a little bit weaker down here, but we're starting to put in bullish divergence patterns. So all of that for me is suggesting, you know, dollar index is weak and those other currencies are starting to strengthen. Forget the emerging market stuff. I mean, I don't cover that. I don't look at that, and all of those things. You know, the Brazilian real, the Turkish lira, all those things have been horrible. I haven't got charts on those, but all I'm looking at is the stuff that the dollar index is kind of concerned with in the major kind of trading pairs. And for me, that story is those things are strong and the US dollar is weak compared to those. And lovely little setup this morning. I'm going to put this, attach this on, if I can get this out kind of quickly. It was a triple support at the beginning of the day. And you can see here, this is the beginning of the day on 3 different time frames. We've got support, support, support. So the 4500 tip bar chart, here we go. Yesterday's sell-off, bang, huge down into the 70s, and we bounced, or was it 60s, high 60s, bounced from there, bullish divergence, bang. That's short covering rally, you know, showing all of that volume, whoops, showing all of that, the strength of the volume that's kind of jumping on board that move as you know, trailing stops are hit the covering short position and so on. So that's just short covering rally. We come back in to test, all the blue professional bars kind of come in here. Don't get near the lows here, another exhaustion pattern here. Overnight we've got a bullish divergence, and you know, at the open, because this is a reversal day, we reversed around 11 o'clock. You know, it's just after 11. I say that's kind of the window for reversal. So a reversal day, and we kind of tested back down. We've got support in here. At the beginning of the day we got blue professional bars, cyclical support kind of comes in, got a little bullish divergence going on there. 1500 tip bar chart, beginning of the day, pull back to end of trend. This again, same type of thing that you see with short covering rally. So you know, yesterday we were putting in those exhaustion patterns, bullish divergence, come back in, weak selling, and then all of a sudden we're kind of quite anxious to get on board this move. We test back down, blue professional bars at the open, pull back to end of trend, cyclical support comes in. And then on the 500 tip bar chart, there we go, cyclical support kind of comes in. So it was a triple. Nice one. And all the background patterns, so the blue professional bars are holding, and we're not breaking those cyclical supports. We don't actually break through them at all. Where they're kind of good to go on all three time frames, bang, and we set off to the upside. We have a really nice little strong rally to go, and I was long 77.50, out at 82.50 for 5 for one shot, one kill. Moved the target out. I actually moved it out to 83.5 for 6. It did get hit eventually, but kind of lost my nerve as we were kind of going through this move here, and just got out before what is it, 250. So it was around this point here as we're getting kind of exhaustion patterns. Anyway, so I might attach that one. It was a good little trade to kind of start the day, and this is the overnight activity. You know, the market shut at 3:15 Chicago time. We had a whole bunch of blue professional bars, and then just gamed it up in the after hours. That kind of funny time between, you know, the close and like the real close at 4:30. I don't know what we're calling that kind of intermediate kind of time period. Day sessions kind of over at 3:15, but we got this activity in that funny period afterwards. Anyway, I'm rambling. I'm getting this video out. I hope you had a good day's trading. Okay, just gone long 77.50, long 77.50, and jumping in straight away because we've got a triple set up. We've got support 500, 1500, 4500. Yesterday was a reversal day. Came back down to test, and overnight we've had some blue professional bars coming at lows, pull back to end of trend. Possibly looking for an exhaustion pattern today, but yesterday was a reversal day, and we kind of tested back with that, if you like. So here we go. Here we go. Alright, so we're popping. As high is 82.50. Looks like it might be a one shot, one kill. Okay, just moved my target to 82.50, just because we've not seen blue professional bars yet. 81.50 has just got touched, so see if we just get a little bit 8,000s, decent reading. That previous high around there will get some technical resistance. This is where I always worry whether I should have moved my stop or not, moved my target or not. Here we go. We're going pullback to end of trend on 500. Got a little bit of time to run support to resistance. Here we go. So blue professional bar is quite significant. 4,500. Yeah, these retraces I hate, where could have been out at 150, and now I've got to sit through this. So it's not going to be pullback. It's going to be a deep dive. Alright, it's a little bit of amateur activity. There's amateur up bars here, down on 15, so we're just testing in. Amateur down bar here. What I want it to do there, break above, so that was just a little weakness test. Okay, now we're getting another break above resistance, so that was a little amateur testing bar. So now heading back up, test 81.50. Hopefully push through it, and then we'll see blue professional bars kind of coming on 1500. Okay, well now I've moved my target out to 83.50 because I think we're going to go for a pop above resistance on the 1500. Blue professional bars here, a little bit of a gathering waiting to go. It's an amateur up bar, don't particularly like that. But we could easily get through this high at 250, go run some stops. The high here is at 4. So maybe between that and that's kind of an area. But we've not, it's kind of zero, better momentum, it's not gone exhaustion, not gone blue professional bar. So we're just looking for that pop up to 150 and out of this. Alright, here we go. Original target 150 just got hit, busting through. So through resistance, get on 500. Another trend moves. It's 3,000 on better momentum. This reading was 7.6. So now I've got my target at 350. No blue professional bars kind of come in. So go. See, I mean, there's the bunch of stops is going to be up around over 4s, but no blue professional bars yet. So what I'm hoping for is just a burst around 250, take us to 350. Go. You can see it's gone kind of exponential. It's at 3, blue professional bar coming, 5,000, 6,000. It's got resistance come in. All I want's another just a little bit. Just take me out. No, just out 82.50, 4.5. Excellent. It's going to go 83.50, I'm sure. Got within a quarter point, but the reason for getting out, we got cyclical support on 500. There's the blue professional bar coming, and we had another one on 45. And I find these really significant. So already moved my target out. So why get greedy just for that extra point? It was a good one shot, one kill. It's going to go pull back end of trend. It's going to put in a bearish divergence pattern here, but yeah, sometimes I'm pushing it and I don't enjoy it. So here we go. We're coming back up through threes. We'll probably go for that burst. Yeah. All right. Not bad. Oh, it was 8.46. We've got consumer confidence at 9. Don't know what it's going to do today. There's bearish divergence coming. So that's playing off that exhaustion pattern pre-open. That's interesting. Well, maybe I am glad that I'm not holding to 3. But this ought to go pull back into trend. Anyway, good. Oh, there we go. Took a while after a pullback down to 175, and we got our pullback to end of trend signal on 500. And possibly out at 84, so there's another 1.5 in it. But now we're into an exhaustion pattern with left shoulders, pull back to under trend flush, blue professional bars kind of coming in here. It's overshot this resistance here on 15 and 45. Who knows where it will go next? We're minutes away from consumer confidence, so that's going to be bumpy and junky, so we'll wait and see what happens after that. But if I'd had the patience to wait it out, that's where it would have got.